fire, yeah.
What is up? Good morning, everybody. Happy Friday. Happy Black Friday. Hope you all had a great Thanksgiving. I know I did. I'm sure you did as well. We missed you. Hope you missed us. We are back. Welcome to the morning show. This is going to be a little bit of a different show today. Black Friday is always kind of a weird day. It's like a pseudo American holiday. The market is open for a half day. It's one of the lowest volume days of the year. So we're here. We're going to do a show, but it's going to be a little bit different. We're just going to, if you weren't with us on Tuesday, we did a live event for Breakout Multiplier. We wanted to just sort of bring that same thing to the masses, to you guys, and kind of have Steve and JC kind of walk through some of their recent trades and why they've worked so well, and also some examples of some trades that didn't work so well for them. So we're going to do that. We'll talk about maybe some current events. We'll sprinkle them in here and there, but it's a very quiet day on Wall Street. Like I said, people are still kind of, hungover from the turkey and the wine and the stuffing and the shenanigans and the family. So it's going to be a good low-key day. And if you're not familiar with these breakout trades that have been kicking ass during this bull market, you're about to find out. So here we go. I'm going to run my intro, smash the like, and let's get this show on the road here. Let's bring on JC and Steve.
All right, ladies and gentlemen, we are back. Happy Thanksgiving, folks.
Hey.
Was Uncle Bob asking about the Cardano at your guys' Thanksgiving feasts?
No. There was no talk of crypto at all. I played football, a little bit of a pulled hamstring, a little bit the other day playing a little football. Made it out of there alive.
You hurt yourself playing some backyard football?
Last play of the game, felt it a little bit. I was like, well, that's me. I'm out. See ya. I'm going to the bar.
That's great.
So Thanksgiving is my favorite holiday, guys. I absolutely love it. Friends, family, good eats, Pinot Noir, football. I mean, what else can you ask for? There's this little tradition we have here in America. It's a little silly, but we embrace it here, where on Black Friday, which is today, by the way, for those of you around the world, today is Black Friday in America, where us silly Americans, we just want to buy things at really, really deep discounts.
Yep.
It's just part of the culture. It's just what it is. Yep. We like to make fun of ourselves. You guys are welcome to make fun of us also. But what we're here to do today is give the people what they want. Breakout Multiplier has been the most successful launch that we've ever had in any research that we've ever done by a long shot. So today, Black Friday, Spencer Israel has created quite the package for everybody. Mr. Spencer, you want to drop the link and tell the folks about it, and then we'll get into it?
I most certainly will. Where's my chat right now? Oh, there it is. I'm going to drop the link in the chat. Breakout Multiplier. Steve's been running the strategy. How long, Steve? 7 years? Is that right?
10.
10 years?
Yeah.
I thought it was 7.
Take some time to figure out.
All right. Wow. Well, anyway, 10 years for you.
These systems don't build themselves, Spencer.
Yeah. 10 years for you and a few months for the rest of us. It was Festivus for the rest of us. But in those few months since the middle of July, Steve has been absolutely crushing it. So anyway, Breakout Multiplier. I just dropped the link in the chat. It's also in the top of the description on YouTube. And that link goes to this little page right here. Our Black Friday offer. Get the quarterly, get the annual. Look at those prices. Insanity.
See,
you need it.
This is my kind of deal, right? If you got to give me at least like 40, 50% on Black Friday. I'm shopping the deals today, and what happens is they already come out. So you're getting all like the text messages and notifications yesterday. I'm in the market for a couch. Lovesac has like 30% off. And we are so long Lovesac.
I was about to say, I see what you're doing there, Strazza. Helping yourself. I see you, dog. I see
Those
you.
are expensive, man.
It's a great base. And I like the base so much. We've already sold the double. Now we're making money on the remaining half. I feel like I should just give a little back and buy the product. You ever feel that way, JC?
All the time. Remember when we made all that money in the mana, which was the coin in the metaverse, and then I took some of that profit and bought some real estate in the metaverse. Remember we did that? So
yes, Exactly.
This is what I do. You know, we made all that money in helium a few years ago. I bought some helium miners, started doing a little helium mining, right? This is what, you know, I play. So what you're doing, I truly appreciate that. You got to give the people what they want on Black Friday. People, and I'm understanding here, it's a worldwide thing, according here to Shadow Wolf. It's not just an American silly thing. It's a worldwide silly thing. So, hey.
You know why? People love buying stuff.
People
That's
love buying. It's just a human thing. It's a human stuff. So we got to give the people what they want. This is a hell of a deal, guys. We're going to get into it now because this is such a great strategy. I absolutely love it. By the way, when I talk to other people, you know, I talk to people a lot. When I talk to them about this strategy, their heads are exploding. They're like, this is fantastic, JC. How did you come up with it? And then I go on to take all the credit. I'm like, well, this is a strategy I personally have been developing for 10 years. Steve Strazza. No, just kidding. I actually don't say that. I give Strazza all the credit. It's great. Let's get into it. There were 3 trades, 3 in one day. 3 trades dropped just now. This was on Wednesday, so technically it's just now because the market is about to reopen.
Sure.
3 trades. All of them had to do with China because, of course, Donald Trump winning the election by a landslide. Of course, that's going to be great for China, right, Strazza? Like, duh.
Yeah, but listen, I'm proud of us for this one because we could have dove in here when everybody was, you know, getting frantic after the election rally began, 2-3 weeks ago now. We are really, really careful when it comes to picking our spots. To the point where I got Carrie texting me if a trade doesn't go out for a week, where are the trades? How can I help there be more trades? No, there's going to be 3, 4, 5 trades on a given day sometimes, and then there's going to be 0 for a couple days. Because if we get the timing like exactly right, which I think we're doing with China right now because we've been super patient. We're coming in after a massive momentum thrust. If we get the timing right, selling the double becomes so easy, right? And then it's a free ride. So that's what we're trying to do here with China. This is also a big theme, JC. So why not spread it? I hate when I pick the wrong vehicle but the right theme, right? So for example, you get long JD.com because you think China's ready to go. Everything else in China works, but there's some problem with JD.com. It doesn't go. So buying the index, and then we're also buying 2 names, 1 laggard, 1 leader. And I think that kind of diversifies us really well and gets us into this theme.
All right, so what Strazza was just alluding to, one of the great things, we're going to go over the details of the breakout multiplier strategy now in a second, but the goal, let's start with the goal. What is the goal here? The goal here is to take a trade that traditionally at All-Star Charts Research could bring 20, 30%, and there's nothing wrong with a 20, 30% profit on a trade. That's very respectable. That's fantastic opportunities. Now, with that being said, there are a lot of us, myself included, Carrie Schaffer, who just got a shout out as well, Steve Strazza, of course, who are interested in making the most amount of money possible when these opportunities present themselves. Contrary to popular belief, you know, it's not losing money on a trade that's that pisses off traders, right? Like, we're going to lose money on a trade. It's part of the game. We understand it. Not a big deal. What really pisses us off is when we nail something, nail the timing, nail the trade, but we don't make enough money from that situation. That's what really pisses me off. So Breakout Multiplier was specifically designed to multiply the profits on these breakouts, and sure enough, it's working out great. So let's talk about this China situation. 3 new trades were just dropped. You can click the link that Spencer just dropped, get the details on those trades, but this is very simple. China's washed out. Nobody likes it. Nobody wants anything to do with it. It's a disaster. Donald Trump's going to be the president of the United States. This is before the election, right? All the markets are pricing in a Trump victory. You know, that's got to be bad for China, right? Got to be bad for China. But
all these tariff headlines.
Just before that, tell them about that momentum thrust that took place right before that election.
We had some of the most historic readings in the short-term rate of change indicators that China's seen in its history, right? And this is for stuff like FXI, the indexes themselves, like the China CSI 300 or the Hang Seng. They were all momentum thrusting. In other words, best week ever, best 5-day period ever, best 10-day period ever. When we see that, that is either initiation of a new uptrend or the exhaustion of an old trend. And at this point, it really looks like it can't be exhaustion because China is right down here on the floor. It was coming off of, multi-year lows when this happened. So it can't be the exhaustion of an old uptrend because there was no uptrend. It has to be the initiation of a new one. When we look around global markets and even in the US, especially in the US, we're seeing all of these textbook trend reversal patterns. And China is starting to look a lot like the ones that are just going recently. So I think we're getting in a little bit early here, but we're getting in on a nice textbook correction after a momentum thrust. So we have a lot of conviction that a new uptrend is really taking shape here.
So here we're looking at the China CSI 300 index, which is the equivalent of the S&P 500, but for China. And you had that bottom at the beginning of the year. You had that successful retest in the back half of the year, followed by the greatest rate of change, the most aggressive momentum thrust in the history of Chinese stocks.
Yeah.
There's the ripper. That's the initial momentum thrust. And then that healthy consolidation. That's what we've been seeing since the election. Trump wins by a landslide. I know Jack is trying to tell me that he did not win by a landslide. Bro, look at the market. It wasn't even close.
It was gross. Whooped her. So
yeah.
I got to point out, though, these momentum thrusts weren't just at the index level. We saw momentum thrusts in the relative trends, right, which is saying expect more outperformance from China in the future. And we saw momentum thrusts in so many of the individual components, right, individual stocks like JD.com, TME, TAL. They're all thrusting. So when you see that all come together at the same time, you can really, really be confident that the next leg will be higher. And a lot of these, JC, have pulled back textbook 38%, 62% retracement after this little initial reaction leg higher. That's really standard stuff, right? That's what we expect to see.
Spencer, drop the link one more time. We're going to go into the JD.com. Obviously, we're not going to get into the details of the trade, but I do want to show the setup because this is the old classic scoop and score, Mr. Strazza, the old scoop and score. Why don't you tell them? Tell these kids how it's done.
So JD, if you were to zoom out on this, it's trying to form a nice little base like the ones we're talking about. It's textbook rounding bottom formation. But we've zoomed in here, and you see this momentum thrust occurring in the middle of the screen, right, in September. We zoom higher, and then we really take a hard retest back, but we're just testing the pivot highs, right, from earlier this year. We dig in there, break a little bit, which we love to see. Give the bears a chance to bury this one. They couldn't do it. It's popped higher nicely. It's looking good again here today. So we think as long as we're above this 35, 50-ish level, it's go time. There's a VWAP coming from these pivot highs as well, which isn't shown here on the chart. Even better, I wrote an article about JD, I don't know, a couple months ago. JC keeps coming and going. I wrote an article about JD. I'm trying to find that chart right now. But they kicked this thing out of the NASDAQ 100. Walmart divested out of it, had a huge equity investment in the company for, I think, 10 years. It's just a lot of the sentiment that you tend to see at market bottoms. So I think sentiment was really a tailwind here for JD as well. I don't know if you could find that chart, Fonz. It's on the blog and somewhere on my Twitter. Hey,
what I like here is that retest of the resistance. Look at that resistance in the spring, and then we've come down to retest that. And not only did it successfully retest it, what ends up happening is that you have the sellers are breaking below those levels. So now you have all the short sellers coming in. Anybody who was long is getting stopped out against that level, and now all of a sudden you get the reversal. So anybody who's short, why'd you take the chart off? Put the chart back on.
Throw back on.
Throw back on.
And that's a perfect little short-term coil. If you look at the momentum too, we don't have RSI 14 here either. Momentum didn't even get oversold. We have our volatility squeeze indicator, which is actually crossing over perfectly. Michael Naus reached out yesterday. Was like, I love what you're doing with the moving average crossover system on the volatility squeeze. So he's looking into it, trying to implement it in his systems too. But it's really cool and it's been working. It helps us spot these tiny little coils, like where you have circled here in green. Look at how tight we get right at this perfect level. Right at this former high, really tight, pops higher, a little gap out of this coil. What, Wednesday?
Yeah.
What is it, Friday?
Absolutely fantastic, because it might not be a quote unquote short squeeze per se, but it's in the same, it's like a short squeeze's cousin, right? It's like it's in the same stratosphere. It's the same philosophy, the same mentality. The market is off sides is essentially what we're looking for here, right?
It's the essence of the move.
And I want to say one more thing. We're getting so much pushback, not so much pushback. There's a few Karens out there that are pushing back on this whole Trump landslide thing. It doesn't matter. The
Yeah,
point
right.
of what happened with respects to the election is that the market was pricing in a Trump victory, right? You got the Trump victory, and then
Mhm.
the market acted accordingly. That's all that matters.
And it didn't
Whether
sell the
it
news
was
at
the
all.
popular vote or the
Yeah.
electoral, it doesn't matter. None of that matters. We're talking specifically about the positioning of the market. This has
One
nothing to do with politics.
one thing that we did find out again, which we learned 8 years ago, so it shouldn't be shocking, is that the market and risk assets in particular love Donald Trump being president. So if you like making money on your longs, it's probably not a bad thing, right? I don't know.
Yeah, for sure. And I really, really like how the common kind of like the instinct, the natural instinct is that a Trump victory will be terrible for China. And while in theory that might be the case,
Well,
the bet is the exact opposite. I think we look back 6 months from now and say, wow, the biggest winner post-election was China. I think
and
there's a very, very good chance of that.
we're fading that rhetoric, right? We're absolutely fading the Trump tough on China, going to bury China. These stocks have already been killed. Something like JD.com's 80-something% drawdown from its multi-year highs a couple years back, right? So these stocks have already been discounted to the gills. Okay, so Trump comes in and he starts talking about tariffs, and then the headline finally dropped on Tuesday or Wednesday saying like 10% across the board on everything. These stocks have already sold off based on the anticipation of that news. Now that news is off, and guess what? They're popping higher. So I think it's all baked in at this point. Whatever tariff situation is going on, the market's really, really good at pricing these things in. And I think we go from here and we look back and we say, oh, China bottomed just as we were imposing, these new tariffs, and exactly at the time where you wouldn't think it would bottom. Did you hear what I just said about the JD.com sentiment? Remember, Walmart sold their stake. They were in for like 10 years. NASDAQ 100 just kicked this company out of their index. They've been in there for almost 10 years. Like, sentiment's great for China and JD specifically.
I love a good unwind. And again, getting back to the main premise. Great. Let's say that we're right on this China trade. If we don't make as much money as we should with this reversal in China, and we nail this trade as much as I think that we're about to, if we don't make enough money on that, that's a bummer. If we're wrong on this and we lose a little bit of money, that's not a big deal. My biggest concern is if we don't make enough. And that's where the breakout multiplier system comes in. Why don't you walk through the track record? We don't have to do any end zone dances and all these victory laps, but why don't you walk through sort of how the system works here? Look at the average month for breakout multiplier, average 9 trades.
Yeah, nine trades means you're really getting one, a little more than one every 3 days. We're selling more than half of our positions are being sold for double, which means they're becoming free rides, right? You have zero risk at that point when you sell the double effectively. So 55.5% have doubled. Out of those doubles, 2/3 of those actually go on to triple, right? And you're getting in the money at this point. So the triples become quadruples and become quintuples really fast, right? Once you're deep in the money at this point. So of the triples, 47% go 5x for us. And then with all that upside, only 1.5 out of those 9 trades per month have been going to zero. And those are going to be losses that we basically just, for track record purposes, we treat them as if we're getting nothing back. And we lost everything that we put in.
Throw the next one up so you can see all this green. So all of the green on these bars are triples, right? So of all of these trades, look how much are green. At least triples. There's a 10x in there as well
There's
on
10X,
the
12X.
Peloton.
There's a couple 7Xs. Yeah. And so you can see, like, some months are better than others. July was great. No zeros. November's going very well also. We've been selective despite, this big rally. Put on a bunch of trades ahead of it.
Walk through this pie chart here. I love a good pie chart.
So basically what you want to pay attention to most here is that anything that's yellow or green is very good, right? So the yellows might actually end up being flat. You sold the double, so you made no money, but you also lost no money. But then we go 3x on 22%. We go 5x on 13%. And then 2% of our trades are doing 10x or more. That's great if only 15% are zeroing out, right? And then we still have basically a quarter of our positions open at this point. Some were rolled, but they're still open. So we don't know what they are quite yet.
Now the goal here is that 10x. You see that lower, that bottom on the lower hand side there, and there's that Peloton trade. So that's what we're looking for. Not every single trade is going to be a 10x return or 12x in this case. But that's what we're looking for. And any of these tiny losses that we take along the way, this is going to more than make up for it. You want to walk through that?
Well, yellow here is not necessarily bad. It means we at least sold the double, so we didn't lose money. The only ones where we lost money, there's no bar, right? We should probably color code them red or something, but there's not many. And then the ones on the right-hand side of the screen, they're still open, right? They're still working. So you can see how few zeros there are. And then we've only made green anything that's, I think, 8x or better? Yeah, we're only putting green here like the absolute home runs, the big outliers. But what's more important, I think, is that everything in blue was a good winner too. Right? A really solid trade. So blue or green is excellent. And you see that kind of all over the screen right here. That means we're doing pretty well this year.
So this is great. Strazza gets his flowers. The track record is great. Everybody's thrilled. Everybody's talking about the breakout multiplier strategy. It's Black Friday. Everyone's looking for the deal. This is a hell of a deal. At what are we talking? We're talking $7.95 for the quarter, $29.95 for an annual plan, risk-free. And you get a 4-week mastermind with Steve Strazza walking through the strategy and how you can incorporate it yourself. Now let's move forward.
Yeah. The mastermind's important though, right? Because some people might be watching this saying, oh, they're trading options. That's a little bit too complicated for me. We talk it all out together, and it really is a simple system. And the mastermind is important for that. So we can walk through, what our approach is, exactly what we're doing, how we're selling the doubles, how we're managing the remaining half, how we're position sizing. We talk about all that stuff.
All right. So moving forward, there's a common theme that we're seeing. And the pattern itself has been a very common theme we've been seeing for a few years now. It's just that the biggest laggards currently, the ones that got hit the hardest after that 2021 peak, are the ones that are now popping off. So Strazza, why don't you walk through what you like to refer to as speculative growth and how that's outperforming the large cap technology and the large cap growth stocks. And we're finding winners again and again and again here.
So this ratio tells us a lot of things. Reading from left to right, it tells us that you didn't really want to own speculative growth stocks for a long time, several years now, right? Then we go through this little consolidation phase. This is the same little rounding bottom reversal that we're seeing on absolute basis in so many stocks and indexes right now. And now you could see new 2.5-year highs. ARC next generation internet stocks, which is simply a barometer for, like what JC said, speculative growth, or the spec tech basket of stocks, right? It is completing a trend reversal versus the NASDAQ 100, which this is big tech, big growth, right? So this tells us we should anticipate more outperformance and more leadership from the riskier growth stocks, the riskier tech stocks, the smaller ones, the more speculative ones, unprofitable tech stocks, pre-revenue biotechs, right? Those are the names that we want to be in. So we've leaned really hard into this ARChy theme, the spec tech theme. And a lot of our big winners recently have come from, they're not all ARC components, right? But I use that kind of as a basketing term. They're speculative growth stocks. And they've really been running, and we keep leaning into that theme. This chart is really helping us stay on the right side. We could have been buying semiconductors, JC, these past couple of weeks or months, right? And look what semiconductors are doing. SMH is like completing a top again.
I was going to say, why would we have done that?
So, it's important that we're putting these trades on the right things or the right areas of the market that are seeing momentum, and we're just riding those momentum waves, right? And when this changes, and if this falls back into the box, or if we see semiconductors completing a relative base like this, then we'll lean into semiconductors, right? We don't care where we go, and we can go anywhere because the equity market's so beautiful. If we see some sort of breakout coming in natural gas or silver, we have vehicles where we can lean into that theme too. So we could really do anything. We could buy bonds and breakout multiplier. So we don't care. But right now, it's speculative growth.
Yeah, no, that's a great thing about this system. Number one, it's a very repeatable process. Let's get into the Peloton trade so we could talk about this repeatable process. It's literally the exact same thing every single time. And again, like Strazza said, right now, what's hot is the speculative growth. Obviously, China, one can kind of maybe somewhat group in China with somewhat speculative growth. It's kind of like speculative growth's cousin. But nevertheless, whether it's natural gas or precious metals or bond ETFs or crypto miners, there are always opportunities. And when those opportunities present themselves, the idea is to make as much money as possible when those opportunities do present themselves. Because again, it's not about losing money on a trade. We know that's going to happen. It's just part of the game. It's when we nail something.
Yeah.
If we don't profit from it enough, that's a bummer. So this is the opposite of not profiting from it enough. This is exactly what we're looking for. This is Peloton, a blue chip consumer stock. No, just kidding. The furthest thing from it. Tell them, Strazza.
And Peloton, another important point here is that the breakout multiplier universe is literally our entire coverage universe at All Star Charts, Stock Market TV. So anything that we're covering in any product is basically in our scanning engine and susceptible to popping up on one of our scans. Peloton really came on our list because of the work we're doing on the beat report. We saw a huge shift in earnings sentiment, where the stock was up like 40-50% on its last earnings report, and the earnings weren't any better or worse than it had been reporting for the past 5, 6, 7 quarters, and the stock was getting killed. So we notice something like that, we flag it, we say, okay, all of a sudden the market is rewarding Peloton for the same reports that it used to punish them for. Interesting, right? And then we see Peloton getting high and tight, and it pops up on our volatility compression scan. We say, oh wow, look at this little tactical base trend reversal trying to take shape here, coiled up nicely. And we knew we have earnings in like a month. So why don't we play this coil, try to get a pop, sell the double quick, and then we have a free ride into an earnings report when last time they reported, the stock was up 40-50%. We're saying to ourselves, this could be a home run. This could be an outlier trade. If we get another reaction like we did last quarter to earnings, this could go 10x. And that's exactly what it did. So we paid about 16 cents to get into the coil. We sold half, I don't know, a couple weeks later when it burst out of that coil. It really started to discount the earnings report early, which we see all the time, right? It was pulling some of those earnings gains forward. But then the stock still popped. I don't know. You can see it here with the last green circle. It was up on earnings. It looks like, I don't know, 28% that day. So that allows us to sell it at more than 10x. We got a 12x. And we basically got out because you could hold past 12x, but you're really getting greedy at that point, right? And you're so deep in the money, those calls no longer have the leverage that we're really looking for. So in most cases, you're going to want to pay yourself when we go 10, 12, 15x, and then redeploy that capital into something that's coiled up and set up like Peloton was here a couple weeks prior.
And in this case, after selling half on a double, right, you got a free ride going into earnings. Stock's up almost 30% after earnings. The options are up 12x. The way I look at it, if you're not taking profits there, like what the hell are you waiting for?
I can't help you.
There's a common sense aspect to this as well. But
Yeah.
You'll see that the entry points, the themes are very consistent again and again and again. Show the block trade again.
Now, hold on.
Speculative growth.
And JC, I just want to point out the volatility squeeze indicator because this thing is so good, right? This is what I just said I was talking to Nos about yesterday. So go back to the last 3 and just show them in sequence. Show where the volatility squeeze indicator started and then where it came to, because that's really what we're looking for, right? So see it down here. The moving average bands haven't even crossed over yet, but you could see the evidence of it. And volatility, the squeeze indicator itself is at like its lowest level in several years, right? So we say, okay, this volatility has been compressed for a while now. We think a pop is coming. We see the volatility squeeze indicator crossing over, indicating an expansion in volatility. We make the bet that that expansion comes in the form of upside momentum. And look at that, perfect cross right there. That's how we knew we nailed it, right? We said that volatility is coming. Fantastic. And the same thing with Square, really.
All right, so Square, same exact thing. Look at that volatility squeeze indicator down below. And then just to reiterate, for those who might not be aware, there are anomalies in the market that we're here to take advantage of. Market prices are not random, contrary to popular belief. We know for a fact that asset prices trend. We know asset prices trend. Facts. We also know that volatility mean reverts. So from volatility contraction comes expansion, and that's precisely what Steve is talking about here. So if we're long volatility, we own premium. When that volatility expands, that's where we make the most amount of money. So we're looking for that contraction, expecting that expansion. So you can see that in block, same exact thing.
And this was a post-earnings trade. So what we did here was actually the polar opposite of what we did in Peloton. In Peloton, we were anticipating a move ahead of earnings, trying to sell the double before the report, and then letting the rest ride, and then hoping we get a positive reaction on earnings. With Square, we noticed massive opportunity here. They killed this stock. The morning after it reported, it was down like 10-15% pre-market. We watched it climb all morning, right? Paring back those losses. Almost flipped positive that day on its earnings reaction candle. We see this massive wick. We say this is a reversal candle. We look at its peers like Peloton and all these other speculative growth stocks, and we see the way they're reacting to earnings, and we see the way that they're breaking out of bases that look just like the one in Square. We say we like our chances, right? So we're utilizing that intermarket analysis too here. Everything else that we're doing, that matters. So we say, let's run Square back to the upper bounds of its base. We got that. We sold a double on the way because it really undid that earnings reaction 2-3 days following its earnings. We break out through the VWAP, through the base breakout level. This is a multi-year rounding bottom pattern, right? That is completing right before our eyes. We've already sold half. We have a free ride. Why not let Square go? So that's how we're playing this one. The calls are worth what? $16.50 now. We paid less than $2. That's great.
All right, so I'm going to be the old man in the room. Go on to the next one and show the folks. So when I see something this successful, when I see something everybody's talking about, everybody's so excited about it, I'm the old man. I'm the
It's too
yeah,
risky for you.
but maybe in other market environments it's not going to be that good. You know, is this actually a consistent strategy that can work over time? And most importantly, is it a repeatable process? And that to me is the most important thing. I mean, yes, the returns have been fantastic. The strategy is working great. But to me, is it a repeatable process? So let's walk through that quick, and I'll handle this one, Strazza, because
I'll go fill up my coffee.
the repeatable process to me stands out the most. Throw up the rangefinder app, because this is where it starts, and this is where I take the credit, right? So Strazza gets a lot of flowers. This is where I like to take the credit as the founder of allstarcharts.com. All of this that you see here stems from the original research being done at allstarcharts.com. So this is our rangefinder app. This is step one of the breakout multiplier system. Step one is, let's look at the trades that are in range. Let's look at the trades that are a go. I don't care whether they came from the small cap scan. I don't care if they came from the high short interest scan. I don't care if they came from the Hall of Famers. I don't care if they came from the conference call or the gold miners report. It doesn't matter at all. Once they get there, they're on there. And that is step one, right? Now what we do is we run all of the stocks that are a go, and we put them through that volatility compression scan. Can you show the folks what that looks like? So here's the volatility compression scan. So these are only the names. Throw up the volatility chart, please. So these are only the stocks that, or ETFs for that matter, if you want to zoom in there, that not only are a go in the system, right? So we're essentially born on third base, right? We start with only the best trades. Then we run that through that volatility compression scan. So now we're only getting the stocks or ETFs that are a go, that are green lit, and that have incredibly tight volatility. So volatility has compressed so much that it has to expand. It's only math, right? From volatility compression comes expansion. Steve likes to call them coils. You know, you'll find in a lot of these charts on the entry point, you'll see these tight coils. All that is that volatility has compressed. And then finally, we're going to go ahead and we're going to enter that trade. And by entering the trade, it's going to be very simple. It's going to be this practically the same every time. It's going to be the 25 delta calls, 45 to 90 days out. That's it. Could it be 100 days out? Yes. Could it be the 22 delta calls, the 27 delta calls? Absolutely. But essentially what we're striving for is those 25 delta calls, 45 to 90 days out, giving us enough time for the trade to work, but not looking out too far so we can take advantage of that juice, so we can make the most amount of money possible when we're right. And if we're wrong, we lose a little bit of money, but when we're right, we absolutely nail it. And that's where the home run trades come in. So step one, go through the rangefinder, look through the trades that are a go. Step two, run it through the volatility compression scan. And step three, you buy the 25 delta calls, 45 to 90 days out. We take half off the table on a double. As soon as the trade doubles, we take half off the table and we let the rest run. And then one more thing that I want to make sure to add is that, you know, you don't have to go in there and find the 25 delta calls. You don't have to figure out which expiration to take advantage of. You don't have to pick the stock that is in the volatility compression scan that you think. All of that is done for you. So you will receive an email or push notification, up to you, with the exact details. This is what we're buying. This is where we want to take half off the table. This is where we think it goes. And we're going to get that every time. Not every day do we get 3 trades in one day, but this week we did. So these are fresh trades, 3 trades. All of them are China related, by the way. Hint, hint. And ready to go from there. So Steve, why don't we show them sort of the consistency of the strategy and go through a few of these trades and what happened.
Yeah, let's do it.
So we're not allowed to say Trump won by a landslide because some people are offended by that sort of thing. But it's what the market thinks, not what we thinks or what the pollsters tell you. The market priced in a Trump landslide victory post-election. It absolutely ripped, really confirming that. And we were seeing that as regional banks were participating in that along with the predicted odds, right?
We were literally using the price action in the banks to confirm or deny what we were seeing in the betting market.
And Bitcoin.
And we weren't the only one doing that. Stanley Druckenmiller came on Bloomberg TV and gave an interview and said he was doing the same thing. In fact, he said, look at the price action in the banks. The market just elected the next president, right? And I think
our friend Tom Lee was saying the same thing.
It's true. People don't like to hear certain things. And you know what? You always talk about like sentiment and offsides positioning. That was just one of those things. Everybody hated to hear this. That usually means that we're onto something. So we said, let's lean into the banks and let's not just make a little bit of money if we get that, reaction rally that we think we will if Trump wins decisively, but let's make a lot of money. So we said, what's the best vehicle? Bank of America was so high and tight. We didn't want to get cute here. We probably could have done better if we went down the cap scale a little bit further on the risk spectrum, bought a regional. But they've been sketchy compared to the big boys. Big boys have been all reliable. The big six banks have been so good. So we saw this coil. We said, we got to get in here. We saw the volatility squeeze indicator crossing up. Volatility is already starting to expand at this point. And we're saying it's probably going to expand in the direction of the underlying trend, which is higher. We got a massive breakaway gap. That's the day after the election. We sell the double right into that, rally. And then we let Bank of America go. And it's still cruising higher. I mean, these banks have just been so good. So if we did anything wrong around this, it wasn't buying more banks.
Right. Well, there were other things taking place as well. Bitcoin and cryptocurrencies were moving into the election, already pricing in a Trump victory, of course. And then we saw the follow through afterwards. Look at that base breakout in Bitcoin. As we like to say, you want to buy those smiley faces. The bigger the base, the higher in space. And the irony in the whole thing is that as well as Bitcoin has been doing, Bitcoin has been a massive underperformer. When you go down the cap scale in cryptocurrencies, they've done much better. This particular breakout multiplier trade in Marathon Holdings is another great example.
We've been all over the Bitcoin miners to the point where we almost put a trade on HUT Wednesday before the market closed. And we're like, we have so much Bitcoin miner exposure. Like, aren't we good? We've been all over these. We sold the double in pretty much every trade we put on a Bitcoin miner. So this is Mara as an example. Look, this thing, if you zoom out on Mara, it's that same rounding bottom we've been talking about, but then it resolved its rounding bottom into this obnoxious rectangle pattern and just decided to go sideways for like a full year on us. Okay. Following the massive Q4 rally this time last year, which you see on the left side of the screen. So we say, okay, it's coming out of this little range within a broader range. We know that the primary trend at least is still higher or trying to be higher. So let's err in the direction of that. Let's anticipate that this volatility expansion comes in the form of upside momentum. See the little coil we have, you get the pop, we sell the double. Hard retest, right? If you hadn't already sold the double in this one, you see that hard retest right back into the blue line after we sell the double. If you hadn't already sold the double, I wonder, I ask you to ask yourself, would you have held on once you started giving back 50, 60, 70% what you initially paid? A lot of people wouldn't have been able to. They probably would have exited that trade as a loser. Selling the double is so powerful. It frees us from our minds, right? When you sell the double, you're not looking at your account. You're not worrying about, am I giving some back? Because you're already done. You lose no money on that trade. So what that does is it allows us mentally to do one of the hardest things to do in the stock market, which is to let our winners ride. And thank God we did with Mara. Hard retest, bounce right off that level. Now the calls are trading around 6, 7, probably more than a 5x, 6x.
Riot, same thing.
Same thing. That one actually worked a little quicker and was easier from a volatility perspective. But we're just betting that this.
Can you explain why you're saying that? Why was it easier from a volatility perspective? It's the same trade. It was put on the same day. Why was this one easier?
Because Riot just climbed steadily for us, while Mara was 40% up, 40% back down, 40% back up, and that could be a pain in the neck, right? If you're trying to manage your account. So look at Riot. You get a soft retest here of that little neckline. We've been betting against these patterns for 2 years now. We've been betting that these tops continue to fail. We think this is new uptrend, not a new downtrend. So Riot does exactly what we thought it would. Hooks higher. We get in right on that hook, right? Perfect entry here. We sell the double in no time at 90, less than 2 weeks later. Little soft retest, like I said, and then the calls go on to be worth about 10x.
I want to fast forward a little bit to a trade that did not work, right? I mean, we could keep going, show the Cinemark, and then we'll show a trade that did not work. Because the Cinemark was fantastic. Show the Cinemark. I mean, this was originally, this system has been in play for almost 10 years, but this was one of the first trades that was actually put on once we went public with the breakout multiplier strategies. We're talking about banks, we're talking about Peloton, we're talking about crypto miners. Now we're talking about shitty movie theaters. Like,
Yeah. So this one, this was a 6x. And look down at the volatility squeeze indicator, right? We're getting in when volatility is at an extreme low and we're seeing evidence of a crossover with our crossover system, right? Basically get the crossover while we're selling the double. We sell the double on 3 follow-through candles out of that coil, right? That's why we're choosing the calls that we're choosing, and we're choosing the time frame that we're choosing, because we're trying to play that pattern, right? And if we get the upside resolution to that pattern, we want that reaction rally to get us not just in the money, but to allow us to sell the double. We want both of those things. And if it happens on the reaction rally, it means that we're picking the right calls, right? So here, that's just evidence that we're doing the right thing. We sell the double, so now we're not concerned. Look at how the volatility squeeze indicator peaks out and starts rolling over. We want to be in here for the big moves, right? Once that volatility starts to die out, we don't need to hang around. We'll take that capital and redeploy it somewhere else. So do the calls steadily grind higher and probably continue to make a little bit of money? Yeah, fine. But we see the volatility indicator rolling back over, so we're probably done with this one. There's better places we could put this money. 6x ain't bad.
All right, so all of these trades are doubles, triples, 10x's, like all rainbows and butterflies. But those of us who have been around the block, we know very well that it's not all rainbows and butterflies. There are trades that do not go up 10, 12x. That's just part of the game. Now, talk to me about the natural gas trade, for example, a trade that was put on with the same intentions. Volatility was very compressed. It's a go on the rangefinder app. The options contracts made sense. Walk me through what happened.
We wanted commodities exposure. We liked what we were seeing in nat gas futures. We liked what we were seeing from nat gas stocks. Cheniere, Kinder Morgan, right? This was like the best group in energy back then when we put this trade on just a few months ago. So we said, UNG, this is a wild child. Let's take a shot at it, right? Didn't have to pay much.
You just say UNG is a wild child?
It's a wild child. This one's a runner. This one's perfect for breakout multiplier, right? So when it sets up, this is something that we're going to hit every time. We'll probably be back in it soon based on the way things are kind of shaping up out here. So we sell the double as it comes out of this pattern. Again, that tells us, hey, we picked the right calls. We're doing the right thing here, right? We get the double right as we're coming out of the base. That's what's supposed to happen. Now it's free ride. We don't care. It could roll back into this old base, and that's exactly what it did. So the calls expire worthless. We sold half for the double. No harm, no foul. But we had exposure to that trend. We had exposure to that theme. We did the same thing with silver. We're doing the same thing with Bitcoin, with the miners, right? We're trying to gain exposure to a diversity of different themes. Now we're doing it with China. So we're building like a very diversified portfolio. I wouldn't suggest that this be your only investment account, only trade the breakout multiplier system. No, I think you want to own the common stocks and a lot of the things that we're trading in breakout multiplier. But we're doing breakout multiplier and treating it as if it's a sleeve to your other common stock account. And we're just trying to juice our returns on the best up legs in the things that we already own, more or less.
And this is a classic Steve Strazza move where he'll buy the common stock or the ETF for his retirement account, and then he'll buy the breakout multiplier system for the A account, right? And do a combination of both. There's nothing wrong with that. I think that makes all the sense in the world. I do a lot of that myself.
A lot of these are good examples. The Square, the Love Sack, those are all just, textbook primary trend reversal patterns that we're buying all day. So we're buying them, but then we're seeing them high and tight, either going into the upper bounds of their base or coming out of the upper bounds of their base, like in the case of Love Sack. And we're like, ooh, let's get some juice on this move that's obviously coming. So we're just levering up during certain periods of an uptrend.
All right, so we got people asking. We got new people that are joining us live. Welcome, folks. If you're wondering where the morning show is today we're having a special morning show. It is Black Friday, and us silly Americans like to buy things at deep, deep discounts on Black Friday. It's just what we do. We eat turkey on Thanksgiving. The next day, we buy a whole bunch of things we don't need. In this case, however, I would highly encourage you to look at this one as a need and not a want. Considering that, one trade pays for the lifetime of the strategy for you. So highly encourage you to take a look at it. So what we're doing today is we're answering the questions that have been coming in. Everybody's talking about the breakout multiplier. Everyone's asking about it. I mean, the success has been off the charts. So I could see why so many people are interested. And, the way I learned it is you got to give the people what they want. Silly Americans want things to buy on Black Friday. Well, here you go, folks. Huge discount on Breakout Multiplier, the most successful strategy ever launched. Never seen anything like this in my entire career. So why don't we show them one more that didn't work? Because again, not all Breakout Multiplier trades turn into 12x's. Let's show them one more. The natural gas trade, actually, it was a break even, so it was a wash. In the case of this gold miner, it was an actual loss, right?
I think we should make.
Oh no, it was actual. We actually also sold half off the table in the AG.
What'd you say?
In the AG,
we sold the double.
Similar to the natural gas.
We sold the double, then it kind of puttered out on us. This is another wild child. We were getting crazy on it. We said this thing's gonna pop. It's not unusual for a stock like First Majestic to be up 15-20% in a day. We got that. We sold the half, and it rolled right back over. It's been a messy trend, so more messiness. But no harm, no foul. I think we need sell the double shirts, Spencer.
Sell the double T-shirts. I really like that a lot.
In front, it says, like, we're all about the STD. And then in the back, it says sell the double.
Yeah, I don't know about that one.
No?
It's a little much.
Okay.
We're all about the STD. You're going to walk around with a T-shirt that says that, Strazza?
It will capture people's attention.
No, I don't think we do that. All right. So guys, listen, not all the trades are working out, obviously, to turn out to 12x, but this Peloton, this is the idea. When we're entering these trades, this is specifically what we're looking for. Again, a nice little coil, compressed volatility. It's a go on rangefinder. This trade where we sold the double before earnings, that's the goal. That's what we're looking for. We want a free ride going into a high volatility event, so we have nothing to lose and everything in the world to gain. We want to put ourselves in the position to get lucky. Was there some luck involved in this 12x trade in Peloton? Sure. But didn't we put ourselves in the position to get lucky, Strazza?
Hell yeah.
Hell yeah.
But we
All right, guys. It is Black Friday here in America, and my understanding is the rest of the world has joined us in the celebration of buying things at deep discounts. So this one, Breakout Multiplier, $7.95 for the quarterly plan, $29.95 for the annual plan. Not to mention the 4-week mastermind where Steve Strazza is going to walk through exactly how he finds these Breakout Multiplier trades, how you might want to use this system as a member of Breakout Multiplier. Also, how you can find your own Breakout Multiplier trades once you understand the strategy. And then we're going to go ahead and we're going to answer all of these questions. This 4-week mastermind, I'm very much looking forward to it. I'm not allowed to be there. This is the Steve Strazza show. I'm just going to be a regular guest chiming in. I'll be the guy heckling you from the back, asking all the questions, Steve.
Who said you're not allowed to be there?
You did.
Okay. All right. I'm okay with it.
Yeah. All right, guys. So go ahead and click the link. Spencer provided it for you. Once again, you get access to all of the Breakout Multiplier. If you want to show them what the app looks like there on slide 50, you know, our friends, our developers, Mr. Brett Schaffer and company have done a very nice job of making us look good. Whenever I show anybody this app, they're like, holy shit, JC, this is sick. I'm like, I know. I get all the credit for this stuff. I get all the credit for the Breakout Multiplier. I get all the credit for the app.
And we worried, JC, right? There's a story here. We worried that this system was far more tactical and aggressive than anything we've ever done. And the fact that we have this tech to help us manage it, give us alerts when we need to get in or enter a trade or sell the double, makes all of the difference, right? And it's part of the reason I think we have the confidence to go forward. And if I could just say one more thing, we take pride in all of our research here at All Star Charts. But this one for me is personal, right? Because I'm literally putting all of these trades on and writing about them for the Breakout Multiplier members. This is my baby. So we take the Breakout Multiplier and its performance very, very seriously here. We'll always continue to.
This system is, in fact, made in America. That's right. This isn't like, Make America Great Again hats that say 100%. Made in China, inside. This isn't one of those. This is made in America. I mean, it's in Florida, so I don't know if, it's kind of like its own planet down there.
Mm-hmm.
Some would consider Florida part of America, right?
There's a little Connecticut mixed in there.
There's a little Connecticut mixed in there. All right. Very American Connecticut, right? Little Italian, very American. All right, folks. That's going to be it for us. This is the Breakout Multiplier system. We appreciate you being here. Everybody have a happy Thanksgiving. It's my favorite holiday of the year. Go watch football. Go eat too much. Go make bad decisions. It's okay. It's okay. Make some bad decisions. You can get healthier again on Monday. But Breakout Multiplier, you want something great to buy at a deep discount, right? You want it, and you got to give the people what they want. So here you go, folks. Don't come at me with we didn't bring you nothing. Here you go. It's all yours.